Hey folks, welcome to Liberty Call. I am back in the saddle. It is Monday, April 26, 2024. Sorry if I don't go real fast. It's still a little tough to breathe in and out after having my appendix and gallbladder removed on Thursday. So everything is really sore through my torso. And even worse, I took a tumble down the stairs afterwards that day after I got home. I was about to pass out and I was feeling nauseous, made a run for the bathroom up the stairs and went down the stairs, cracked my coconut and my shoulder, and but other than that, everything's fine. Had an MRI, so no bleeding in the coconut. So, anyways, so I'm doing good. Well, I'm feeling better relative, considering how I felt Thursday. And hope you're having a fantastical day, and I hope you had a good weekend. And Astros played like crap. Didn't really make my weekend any better. It's kind of a yucky day here in Colorado, a little overcast, not too cool though, so that's nice. I can wear shorts. And if it is your first time watching Liberty Call, I'm pointing at, you right there. If you could do me a favor, give me some thumbs up, a like, share, subscribe, and a follow, and hit that notification bell. All right, let's get into today's numbers and see how the markets turned out. Looks like things were in a more decent mood. Dow Jones was up 0.67%, 253 points, closed at 38,239. S&P 500 up 0.87%, closed at 5010. NASDAQ up 1.11%, closed at 15,451. The VIX was down 9.62% today. It's at 1691. Canada up 0.3%, Brazil up 0.36%, and Mexico up 1.11%. Over in Europe, Germany was up 0.64%, the UK up 1.62%, France up 0.22%. The Netherlands up 0.76%, Spain up 1.5%, Italy down 0.58%, Switzerland up 0.28%, and Portugal up 3.5%. Wow, that's a big jump. Over in Russia, the MOEX, exchanges were split today. The MOEX up 0.22 and the RTSI down 0.06. And the Asian markets, starting with the Nikkei, Japan was up 0.99%, Australia up 1.08%, New Zealand up 0.87%. In China, the Shanghai was down 0.67%, the Shenzhen component down 0.44%, China A50 down 0.09%, DJ Shanghai down 0.46%, Hang Seng down 1.77%, and the Taiwan weighted down 3.81%. All right. Whew. All righty. So apologize again if I pause to catch my breath. It's the muscles in my sides just aren't expanding like they were Wednesday last time I did a broadcast. So, but I should be better by the end of the week. All right, let's get to the weekly economic update. Stocks fell for a third straight week as Fed Chair Jerome Powell's mixed but upbeat message could not offset the anxiety caused by the Middle East conflict. Markets began the week rattled by further escalation in the Middle East over the weekend. A bit of good news punctuated an otherwise sour Monday as a stronger than expected retail sales report showed consumers were spending despite rising inflation. On Tuesday, remarks from Fed Chair Powell indicated a shift in thinking from being confident to not so confident about interest rate cuts in 2024. He said he might need to stay higher until the Fed meets their 2% inflation target. I've been saying that, folks, been saying that for a while. On Friday, the market saw further declines, but investors were somewhat reassured by the perception that Thursday's retaliatory actions in the Middle East were restricted in scope. All right. So let's see here. Let's go down a little further. All right, silver linings. When the stocks are in a downtrend, it's important to keep perspective and realize that markets move in cycles. Here are a couple of bright spots from the last week and perhaps some good news that may influence trading in the week ahead. While Chair Powell said that last week that the Fed may keep rates higher for longer, he also said that the Fed does not intend to raise rates for now. Yeah, for now. Despite inflation concerns, individuals were in a spending mood in March. Retail sales increased 0.7% for the month, more than twice the consensus forecast, and the earnings season picks up during the next 4 weeks. For the week of ending April 26, more than 800 companies will give updates on business conditions in Q1. Economic data this week. On Tuesday, we have the PMI composite and new home sales. Wednesday is the EIA petroleum status report, durable goods, and the survey of business uncertainty. Thursday is GDP, international goods and jobless claims and pending home sales. And Friday is personal income and outlays and consumer sentiment. Bunch of companies reporting earnings this week. Today on Monday, we have Verizon. Tuesday, it's Tesla, Visa, Pepsi, GE Aerospace, and United Parcel Service. Wednesday is Meta, and IBM, AT&T, and Boeing. Thursday, Microsoft, Alphabet, Merck, and T-Mobile. And Friday, we have Exxon and Chevron. All right, so that is the weekly update for everyone. You feel smarter? I know I do. Not really. All right, let's get to today's market recap. S&P 500 rallies ahead of earnings from big tech. So let's go see what's going on there. On Monday, the S&P 500 staged a rally driven by strength in the technology sector, bouncing back from its largest weekly loss since March of the previous year. Investor attention turned to upcoming quarterly earnings reports from major tech companies, with Tesla, Microsoft, and Alphabet set to announce results throughout the week. Despite anticipation for tech earnings, Tesla faced more than a 3% decline after announcing price cuts in key markets, potentially sparking an electric vehicle price war. Oh no. On a brighter note, Verizon Communications saw a stock rise of 2% after reporting fewer than expected wireless subscriber losses in the first quarter, attributed to flexible plans and discounted streaming bundles. Zions Bancorp also experienced more than a 3% increase following better than expected quarterly results, bolstered by reduced credit provisions. Meanwhile, the yield on the 2-year Treasury briefly exceeded 5%, reflecting recent gains as investors awaited crucial data releases, including manufacturing data, preliminary Q1 economic growth figures, and the Fed's PCE price index data, a key inflation indicator. Expectations for rate cuts have diminished, with only 2 cuts anticipated below the Fed's projection. All eyes are on the Fed's upcoming meeting on May 1st, particularly Chairman Jerome Powell's commentary for insights into the rate outlook. Salesforce shares rose 1.5% after the company stepped back from acquisition talks with Informatica due to disagreements over terms. In the cryptocurrency sphere, stocks like Marathon Digital Holdings, Coinbase, Riot Platforms, and MicroStrategy surged alongside Bitcoin, which reached 66,402 following its halving event. The fourth since Bitcoin's inception, reduces the amount of Bitcoin produced by miners on the blockchain, contributing to the rally in crypto-related stocks. All right, so there was a lot of news about the halving over the last week or so, and it appears so far hasn't really had much of an effect on the price of Bitcoin. So I know a lot of folks out there seem to think that we're going to see a huge rally. I'm not saying we won't, but that's where things stand with that. So, all right, one last article here before I let you go. Comes from our friends over at First Trust, Mr. Brian Westbury. This week's article is continued growth in Q1. Let's see what Brian had to say. All right, the economy maintained its growth trajectory in the first quarter of the year, estimated to have expanded at a 2.6% annualized rate, although slightly slower than the 3.1% rate recorded in 2023. This growth is notably above the average rate of 2% seen over the past few decades. However, a portion of this recent growth is deemed artificial and temporary, attributed to government interventions. Yeah, all that spending they've been doing the last year, all that money they've been sending over to Ukraine, that helps the GDP numbers, makes them look really good. So in my opinion, that's why the GDP numbers on the last half of the second half of last year look so good, is all the wasteful money printing that we did to send overseas and, put in the pockets of the military industrial complex. So, it's not really, production inside inside our economy, which is actually doing anything, because we're sending that money abroad and it's getting blown up and killing people. All right, moving on. Directly impacted growth is the inflation-adjusted government purchases, which grew by 4.6% in 2023 and continued to rise at a 2.3% annual rate in the first quarter. Furthermore, the expansion of the budget deficit in fiscal year 23, adjusted for certain factors, increased to 7.5% of GDP from 3.9% in fiscal year 22, contributing to the artificial growth. In addition, despite claims of tight monetary policy, inflation rates remained elevated, indicating lingering effects of past monetary looseness stimulating the economy. Consumer spending was a significant driver of growth, with real services experiencing a notable surge at a 4.7% pace. the fastest since the reopening from COVID-19. Business investment grew at a rate of 2.4%, primarily led by gains in intellectual property. Residential construction showed resilience, expanding at a 5% rate despite challenges from higher mortgage rates. However, the trade deficit expanded with imports outpacing exports, expected to subtract from real GDP growth. Overall, combining the contributions from various sectors, the estimated real GDP growth for first quarter stands at about 2.6%, while solid for the time being. Expectations point towards slower growth later this year as the temporary effects of government deficit spending diminish. Yeah, at some point, the candy or the cookie jar that the politicians and the Fed keep digging into to devalue our current, devalue your wealth out there and my wealth too, is going to come to an end. It's going to bite them in the ass. And I just hope I live long enough to see it. I hope I live long enough to see Washington, D.C. burned to the ground with all the federal employees inside of it. And then the rest of us normal Americans can live our lives happily without ever having to deal with these jerks ever again. So, but that's just my, more, militant libertarian opinion out there. So anyways, I'm a little, I'm a little more crazy than most. So anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. It's right here on your screen. Look at it, folks. All my contact information is there. I hope everyone has a wonderful evening, and I shall talk to you again next time. Glad to be back. Bye.